Welcome to the Tesla Daily News Podcast. Today is December 9th, 2025, and I'm thrilled to bring you the latest news and analysis moving Tesla's stock and driving key business trends. We kick off with yesterday's Tesla stock close. Shares ended the session at approximately $439.58, down 3.4% from the previous close of $455. This sets the stage for a critical look at what's driving Tesla's valuation and strategy this week. Here's what's in store today. We'll cover Tesla's China comeback and what it means for global growth, the launch of Tesla's new low-cost Model 3 Standard in Europe, supply chain breakthroughs powering Tesla AI, fresh expansion for Tesla's charging and retail networks in Japan, why investors are talking about surging Powerwall demand in Taiwan, a look at Tesla's annual holiday software update and the latest from the Optimus robot project, and analyst reaction after a key downgrading from Morgan Stanley. Let's get started. First up, Tesla rallies in China, but faces headwinds in Europe. Tesla's late 2025 performance in China has signaled a strong rebound, marking a sharp contrast with plummeting sales in Europe. After months of stiff domestic competition, Tesla saw battery electric market growth in China thanks to pricing moves and expanding Model Y availability. Meanwhile, reports show a notable drop in European deliveries this quarter. For investors, the China bounce could add upside to quarterly delivery numbers, but persistent European weakness remains a valuation overhang. The real question, can China's momentum offset the drag from Europe going into Q4 earnings? Next, Europe gets the low-cost Model 3 Standard. Tesla has quietly launched the new Model 3 Standard trim across Europe, with initial prices as low as €35,000. This efficiency package version sacrifices some features, but retains Tesla's core value proposition, solid range, and access to the supercharger network. The move directly targets new Chinese entrants and price-sensitive consumers squeezed by high rates. If demand is strong, it could help stabilize Tesla's European market share. However, thinning margins are a risk to watch if Tesla enters a protracted price war. Investors should monitor delivery backlogs and gross margin commentary. Third story, supply chain win for Tesla AI ambitions. A significant semiconductor milestone has been achieved. Samsung's 4-nanometer process now boasts up to 70% yields, and US AI startup Savorite, whose tech is rumored to power parts of Tesla's AI stack, has placed a $100 million chip order. Improved chip supply can enhance Tesla's full self-driving and AI capabilities, reduce costs, and offer better visibility for FSD deployment. This feeds long-term autonomy optionality into Tesla's valuation, but execution and regulatory timelines remain uncertain. Fourth, supercharger and retail expansion in Japan. Tesla announced it will increase its charging network in Japan by 40% by 2027, extending infrastructure into new regions. Alongside, 2 new retail and delivery centers are set to open in Gifu and Hamamatsu by year-end. With Japan's EV market showing double-digit gains, this expansion positions Tesla for continued growth and increases accessibility for current and prospective owners. Revenue from charging and services is a growing line on Tesla's balance sheet, and further expansion should support both urban and regional demand. Fifth, Powerwall orders triple in Taiwan on grid fears. Energy is in the spotlight after reports from Taiwan. Tesla's Powerwall orders have tripled in 2025. As rolling blackouts and grid reliability anxieties rise, both households and businesses are pivoting to residential battery storage. The surge indicates growing penetration for Tesla's energy segment. Watch for this trend to bolster high-margin energy revenues and Tesla's value as a broad energy technology play, especially in markets anxious about power security. Sixth, Tesla's holiday software update rolls out. The much-anticipated annual holiday update is now rolling out, bringing new entertainment features, deeper AI integration, and enhancements like the ability to send text messages while full self-driving is engaged. These updates help keep Tesla vehicles sticky in owners' daily lives, create new revenue streams, and show the company's unique car-as-a-service model in action. Investors should note, software-powered differentiation is key to margin expansion and long-term brand equity. Seventh, Optimus robot demo and investor skepticism. This weekend, Tesla demoed the Optimus humanoid robot in Miami, but a widely shared video of a suspicious tumble is fueling debate about the project's real-world capabilities. While the Optimus robot remains in early development, the project is part of Elon Musk's long-term automation vision and has implications for Tesla's future labor and manufacturing efficiency. For now, the impact to earnings is speculative, but investors are keeping tabs as the AI arms race heats up. And finally, a quick market note, Morgan Stanley just downgraded Tesla shares, citing near-term valuation concerns amid increased competition, demand uncertainty in Europe, and margin pressure from ongoing price cuts. This could weigh on sentiment in the short term, but bulls will point to big opportunities in AI, energy, and global expansion. That's all for today's Tesla Daily News podcast. To recap, Tesla is leaning into China for growth while defending its European turf, striving for lower costs with the new Model 3 standard, and pushing hard in AI, energy, and charging expansion. Watch for delivery data, pricing moves, and further analyst reactions this week. Subscribe, follow, and visit our website for deeper daily coverage of all things Tesla and Tesla stock. See you tomorrow.